You're the owner of a small business, which means you're also the tech guy, and HR, and personal assistant, and head honcho, and intern. You could use another pair of hands, like the experts you'll find at Verizon Small Business Days, April 21st through 27th. Get a free tech check, special deals, and more. Call 1-800-483-4428 or visit verizon.com/smallbusiness to book your appointment. Verizon Business.
Reality radio for a really great future. We're talking real money.
I'm Tom Cox. Welcome to Talking
news,
Real.
Breaking news. Stop the podcast. Oh my gosh, the world is coming to an end, Tom.
This is Thursday. It's supposed to be my podcast on Thursday,
sorry,
so excuse me, Don.
But the whole world is scared now because the world is coming to an end. The U.S. economy is jumping off a cliff. Please save us.
How? What do you mean off a cliff? What does that mean?
You didn't see the news?
No.
Where have you been all morning?
Talking to our clients.
Where have you been all morning? Oh my gosh, the gross domestic product of the U.S. has fallen more than it's ever fallen in the history of mankind. It's down 33% on an annualized level. Ooh,
on an annualized level. You're trying to fool me with numbers.
Yeah, it's down 33% for one quarter. You know what the quarter is?
3 months. I'm just guessing. I could be wrong about that.
Which 3 months?
Sure I'm right,
which
though.
3 months would you guess this quarter was for? Which?
Well, earlier this year is my guess.
Yeah, the second one, which would be
okay.
Which months are in the second one? Just this is a little quiz for you.
I think you start with April, May, and June, right?
Yeah.
I don't
now,
know. Could be
what
wrong.
what happened what happened around the planet in April, May, and June?
Well, all I know is no one was coming to work anymore, so it's kind of lonely
so
sitting here at my desk. So,
and this is true. This is an absolute true story. I talk to Tom every day, and the office is empty, but there he is at 6:30 every morning, right there at his desk, going, "Where's everybody?"
With my tie on too,
Tom,
I might add. I look good.
But for no one. There's a pandemic. There is a pandemic. Okay. Boeing's earnings down, car companies' earnings down. All of these companies didn't do
Starbucks,
well.
Way off, yeah.
So what should, as an investor, I am now scared. What should I do?
Well, I was going to get to that on the podcast, but you jumped in. You stole my thunder.
Well, it's still the podcast.
Thank you. First of all, I think people need to realize that the economy is not the market. And since you joined us, I'm going to put you on the spot. Okay. How is the market not the economy? The economy's not the market.
Because they're different?
What? How are they different?
Okay, the economy.
One should be,
what? Here's what. Okay, let me try this. I got a plan. Here's the problem. As investors, and not really investors, but more like speculators, because we don't believe real investors invest this way, but we tend to think that the market, the stock market particularly, reacts to things going on in the economy. But the economy is different. The economy is the things that are actually happening. The stock market is always trying to look ahead. It's always saying, now, what is the economy going to do? So in March, remember when the stock market went way down in March?
Oh, boy, do I ever.
But gross domestic product for the first quarter was good. We were not in a recession in the first quarter. So why did the market go down in March?
It was anticipating what was going to. It saw me sitting alone in my office with my tie on.
They had their little Futuretron on, and they went, "Oh no, Tom is sitting all alone in his office. That must mean a pandemic." No,
he wasn't crying though.
The news of the pandemic caused long-term investors to realize that there would be a dramatic impact on the economy, and so stocks sold off. Then it was determined that this too shall someday pass.
Indeed.
And so the market went back up.
It did. So
did I do that okay?
I think you did that perfectly. Let's step back from that for a moment and talk about you, because you're trying to figure out what to do, you listening to the podcast. First of all, people have this tendency to think, well, stocks are going down, I need to sell them, and it's like an all or nothing kind of thing. Either I'm in stocks or I'm in bonds or cash. It's not an all or nothing proposition. Most of you should have stocks and bonds, because bonds give you the bedrock, the stability. Stocks are designed to give you the growth. So it's not a one or the other. And when the market says, oh, my goodness, it's down 1.5%, remember, if you're in a 60-40, you're down like 1%. It's not that traumatic. So you've got to put that out of your head. And I know everybody's screaming at you, whether it's online, radio, podcasts, newspapers, TV, et cetera, et cetera. That's one, Don. And here's the other one that I think is at the center of all of this. If you have a plan, if you have a design, if you have a portfolio, it's built for all this. It's already there. So all these things are coming along, whether the next worry is about the election or the next one is what about a vaccine or the recovery, all of those things. Your portfolio is already designed for stocks going up and down, for bonds holding your value. So plan portfolio, build portfolio, review portfolio from time to time, but not in light of recent developments, only in changes in your life, rebalancing like you should have done back earlier this spring. And that's it. It has the idea that you're responding to any of this is exactly the reason investors make less than or make about half of what the market returns over the long haul. That's
their
the
actual
problem.
returns. Yeah, that is absolutely a fact. And what's really interesting is that yesterday, the S&P 500 was up about 1.25%. Yesterday. Now, it was said yesterday that the GDP numbers would be coming out today and that they would be bad. That was in the news yesterday. They came out this morning and they were bad. But guess how far, at least so far this morning when we were recording this, guess how far the S&P 500 has fallen?
Is it? It's a little over 1%, right?
Right.
Something.
Almost exactly the amount that it rose yesterday, which tells me something. I don't predict the future, but what that tells me is that number that it's down today is all of you, is individual small investors reacting to the news when the big investors have already built it in, and they're just going to take advantage of you and buy when you're being dumb. No offense.
And I mean, and those Robinhood traders who are now into Kodak instead of Hertz, moving money around. I mean, the growing number of people that are interested in stocks who think investing in stocks is buying and selling, paying attention to what's going on day to day. And we know that that is a long-term recipe for disaster. You will not beat the market. You will underperform the market, and you will do exactly what Don just said. You will make the professionals very happy and even richer.
Yep.
Don't do that.
And here's the thing. We know, we've been doing this for a long time. We know that it is very, very hard to create a plan for your need and tolerance of risk. We know it is really, really hard. Even if you're a do-it-yourself investor and you're pretty steeled to these things, it's still hard to build that portfolio because remember, you may not need to take a lot of risk to meet your goals, but you probably don't know exactly what your goals are. And that leads me to something that's going to sound pitchy, but it's really not. We provide a lot of help on this podcast, on our radio show, on our websites, all over the place. And something we've been doing, and we really haven't mentioned it very much, but in an environment like this, the plan becomes even more important because people tend to do dumb things. So what we do and have always done is we offer anybody time, free time with our advisors. Our advisors know that's part of the deal. It's built into their compensation. We don't sell anything during this time. It is truly some free time that you can take with one of our advisors to get a plan started. Even if you're a DIYer, and you will be for life, we're good with that. We like to help DIYers. So if you would like to spend a little time finding out what your allocation's like or how you can better balance your portfolio or how you can determine what your risk tolerance is and all those things, just go to our company's website, which is Vestory, Vestory. Go to Vestory.com. Down at the bottom of the page is a little form you can fill out and set up an appointment with somebody, and they'll spend time with you on Zoom or on the phone trying to get you started, get that plan underway. Okay? And I promise you, no obligation, no high-pressure sales pitch, period, and it is free.
And when you started that, I thought it was going to be the worst pitch since Dr. Fauci, but you recovered. So,
that
well
was
done,
a terrible pitch, wasn't it?
That really was
Really.
awful.
But he's old. Come on, I couldn't do any better.
I was also going to get mad at you for interrupting the podcast, but you did such a nice job, and you're going to be on your own next week, so I feel bad for that. So I'm going to go ahead and just say thank you for joining us.
Who are you?
I'm Tom Cock. Thanks for being part of Talking Real Money. Right? Yeah. Okay.
That's good.
Talking Real Money. We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. Are we done now?